Stock market review. Markets are getting wild, aren't they? Well, if you want to know what's going on, then make sure you watch this whole video. Because our buddy, Alex at MacroOps, he's got that good stuff for us. So let's just jump into it. Now, you guys know this drop that we saw in the markets was caused by all these tweets from Trump and the China trade war. Well, it's sort of caused by that. So what happens when something like the trade war intensifies is that the range of plausible outcomes in the market expands. And what does that mean? That just means that uncertainty goes up. So if we think about the cone of uncertainty being like this in normal times, well, when Trump starts tweeting and all this stuff goes down, it turns into something more like this. And uncertainty and volatility drive each other in a feedback loop. So markets, they don't like uncertainty. Even if the market thinks for sure things are going to be bad, even that is better than not knowing what's going to happen. When there's that uncertainty, that's when you get the volatility. And the volatility happens because the market is constantly trying to adjust to what's going on because it doesn't know. There's a lot of competing narratives in the market, and it's trying to establish the price for the correct narrative. And here's something interesting that Alex shows: the dispersion of analysts' earnings estimates. Like when not all the analysts are predicting the same thing for a company's earnings. That actually tracks volatility. You see, the dispersion is this orange line, and then the VIX is the black line. They pretty much go hand in hand. So that kind of shows you that the uncertainty is affecting the volatility. If people don't know what's going on, the market's going to go like that. So the breakdown in the trade talks, and with Beijing saying they're going to raise tariffs to roughly 60 billion worth of US imports after June 1st, that's widening the cone of uncertainty. And it's going to continue to drive volatility higher until the US and China make convincing progress on their deal, or the market reaches a particular price level that, along with sentiment and positioning, better reflects what's going on. And this market drop is kind of coinciding with a lot of the indicators that Alex tracks for sentiment, which you know in all these previous videos, we'll put the playlist here, we're always tracking sentiment. And with sentiment, it's kind of the opposite. It's counterintuitive. If people are super bullish, that's a bad sign. If people are really bearish, that's a good sign for the market, because the market needs a wall of worry to climb. So if everybody's super bearish, the market will keep climbing, because those people that are bearish, they still have to put their money in. They still need to capitulate to push things higher. But if everyone is bullish, then who's left to buy? Because they're already all in the market, right? So that's kind of how we look at sentiment. So if you look at this 1 month moving average of bull bear sentiment, you can kind of see that it's getting a little too high. What you need is muted expectations to get a good rally. But here we're going up, up, and up, which is not a good sign. People are too bullish. And if you look at the extreme exposure index, you can see that investors are starting to invest too much. That's another thing we look for in market tops: leverage and exposure. If people have a bunch of money in, and not just a bunch of money, but even leverage on that money, they're going on margin, well then again, where's the new money going to come from to keep pushing the bull higher? When everyone's leveraged up, the chances of a bear increase because there's nothing to push it up. So when it starts to fall a bit, everyone has to unload that leverage, and that's why you get the huge fast move down. So exposure is another way to look at that, and you see that investors are kind of getting overexposed or over their skis, as Alex says. So hopefully this volatility that we're seeing, which should continue, will reset the sentiment in the market. People don't stay too bullish when they see action like this, and when they start getting bearish, that's a good sign for the market. So Alex thinks we should see the market bounce over the next week or so because it's really oversold on a short-term basis. But he thinks that this rally should be sold into, not bought, because he thinks stocks are going to continue falling until the percentage of stocks over their 50-day moving average falls into this green area. And this is the 20% area. And this is just a breadth indicator telling you how many stocks are doing well versus not, by using the 50-day moving average as an indicator. So he thinks at that level, things will kind of reset. Now he says a major risk here is that this bout of market volatility feeds into the real economy and dampens consumer behavior enough that it actually tips us into a recession. Because nowadays the market tail wags the economy dog. People are greatly affected by how their investments are doing in the market. If things get bad, they might pull back their spending, thinking it's going to be a recession or something, which becomes a self-fulfilling prophecy, because if you pull back your spending, then yeah, the economy does go into a recession. And this actually happened before. Remember when the market was collapsing into the end of last year, the January, February retail sales were terrible. Consumers got spooked by that sell-off and pulled back on their spending, which is exactly what I was talking about, and that's how the market tail wags the economy dog, is as backwards. So Alex thinks the economy is skating on thin ice right now, so a market shock could be the thing that plunges it through. He's not saying that's going to happen for sure, but it's something to keep in mind. So there you have it. If you're a discretionary trader, hopefully this helps. In the MacroOps portfolio, I know we're lightening up on a lot of our long positions, and Alex is actually starting to go short. Like he said, this rally should be sold into, not bought. And as of this recording, we're getting this nice little bounce after all these days of selling. But this doesn't mean the down move is over. Now, if you're a systems trader like I am, you know, with the Nasdaq All-Stars, which I always talk about, which if you want to learn more about, I'll link to that video right here, so I don't have to go over it again in this video. But but it's a momentum system, right? And fortunately, 4 out of the 5 positions have been holding up really strong during this down move. And I don't know if you guys have been watching the Nasdaq, but it's been getting hit hard. But I was happy to see those positions hold up because that means they are the strongest in that group. Now, of course, none of that really matters because if you're a system trader, as I was gonna say, just follow your system. I got knocked out of one position today. It hit its risk point. I'm out. I'm not lighting up on my other positions because that's not in my rule set. So whatever's happening, I'm gonna keep executing. That's the way I do it with my system. That's my strategy. I'm sticking to my plan. Your plan might be different. You might be discretionary. You might want to lighten up on some positions. So hopefully Alex was able to give you some insight into what's going on. Now, as far as we know, as of right now, the bull market isn't over, but we're gonna see a dip here. Now, if you like videos like this going over the market, then make sure you subscribe to this channel and hit that notification bell so you get email notifications when our future videos come out. We're publishing videos almost every single day. So subscribe and I'll see you in the next one. Stay fallible out there. Bye.